So I'm here to share my thoughts about the macroeconomy and its relevance to the theme of real estate, infrastructure, housing. We are in the middle of a pandemic, as you know, and there is still a lot of uncertainty about the road ahead or the road out of the pandemic. But that's not to imply that actually a lot of developments on the health, hygiene, science, vaccine part of it are happening. So my topic, of course, is not going to cover that. But if you've been following the news about the COVID research, you'll see some of that bullishness or optimism reflected in the stock market. Of course, sometimes the stock market gets carried away, and sometimes it's ahead of itself. But you can see globally, not just in India, globally, the stock markets are at an all-time high. I should, of course, caution you that not all of it is coming out of the vaccine optimism. Not all of it is coming out of, let's say, the optimism about the revival of economies around the world. Some of it is, unfortunately, also affected by the fact that monetary policy around the world, that is, central banks, have been extremely accommodative, have been extremely supportive, so much so that the liquidity support, whether it's in terms of money supply or credit availability or subsidized loans or very low interest rates, all that has caused a huge amount of liquidity to come into the system, into the economy, and some of it is finding its way into the stock market and asset markets. So some of the valuation or some of the rise in stock prices is coming because of that. So that also is a factor one needs to keep in mind. It has also gone into areas like commodity markets. So base metals like copper, aluminum, zinc, they're all traded on commodity exchanges like the London Metal Exchange. So that exchange, that price discovery is not only related to the ultimate demand for these metals, but it's also related to the demand from speculators or from investors who just want to hold it as you hold, say, gold or precious metals. So some of those prices are also racing towards all-time highs. So that's just the macro background. So the macro background is that the global economy responded very strongly to the pandemic induced effect on the economy, that is the recession. For the first time after a very, very long time, the entire global economy has shrinkage. So the global economy is expected to, this year's GDP, the calendar year 2020, is going to be about 4 or 5% less than last year, and next year we bounce back. And most of the economies, except for China, and China is the second largest economy in the world, except for China and maybe a couple of others, everyone else is going to experience a contraction. So when it comes to India, we expect something like a 6-7% contraction. So last year's GDP in real terms, inflation adjusted terms, was 200 trillion rupees. This year may turn out to be about 190 trillion. That is our fiscal year 2021, April to March. And next year we expect again a bump up again by another 10% to 10%. So as I said, some of that optimism is already reflected in our own stock markets. That's as far as the global pandemic and reaction to the pandemic. But let's step back, because this is the theme of the conference is on a topic like, say, real estate or housing, infrastructure, and so on. These are not things which change from month to month, quarter to quarter, or even, I would say, year to year. We have to take a somewhat longer-term view. So I want to dwell on longer-term macro determinants, or what I call macro trends. The pandemic, the COVID situation sometimes gets us bogged down in short-term, in looking at the short term. But just stepping back, let's look at the longer-term perspective. I also, by the way, fundamentally, I also believe that our preparedness in handling the pandemic or COVID is hugely better than all previous episodes. There's a global community working together. There's huge connectivity and sharing of knowledge and science. The way the genomics and the mathematical biology works, you can actually the vaccine can be actually put together in hardly 15 days. The time taken is mostly in terms of the approvals and the testing and the FDA and so on. So this capability in the world today is very different from what it was in the past. But let me talk about the macro trends. And these are trends which are fairly, I think, definitive and much less uncertain, much less, much less. What should I say? There is certainty about it. Number one is demography. Obviously, you know that India's demography is such that the average age of India is about 28 years, 27, 28 years. So if you in the audience are above 28 or 29, you're in the older half of the country. And this is going to remain for the next several decades, 2, 3 decades. What this means is that the workforce expands, the India's demography, the implication is that the workforce is expanding a full 1 percentage point faster than the population of India. So maybe the population is growing at around 1.2, 1.3%. The workforce is expanding at 2.4, 2.5. What this means is the class of the workforce, or the class of the population, which is maybe learning in school or in training, which is going to be earning, which is going to be consuming, which is going to be investing, which is hopefully going to be paying taxes, both direct or indirect, is expanding. That's a virtuous cycle. So India will add such people, 250 million such people in the next 30 or 40 years. That the implication for the economy is huge. Just by comparison, the other large country in the world by population, which is China, which actually in the next 30, 40 years will be decreasing because they have already reached their aging peak, and they will be decreasing 150 million people from their workforce. That's the power of demography. You heard this many times before, but it's worth reiterating. So that's point number one. Additionally, by the way, in demography is that our female participation in the workforce will also increase. Just yesterday or a couple of days ago, the state government of Odisha announced that they will be allowing women to work in third shifts, women workers to be working third shifts. Similar measures have been taken in states like Karnataka. What that means is that, especially in sectors like textiles, garments, retail, workforce participation for women will also increase. It's quite low actually in India. It's only about 20-22%, and you need to go at least to 30-32%. So all this workforce participation has implications for demography, has implications for consumer demand, demand for housing, and so on. Number two is the shifting of economic center of gravity from west to east. So India is part of eastern part of the world. The higher growth rates are going to be seen in this part of the world, including India in East Asia. It also has it is coming from what we call infrastructure spend or urbanization. India is going to see one of the most rapid pace of urbanization. We are about 31-32% right now. The world as a whole crossed a major landmark in 2015, 5 years ago, where more than half of the world's population, that is 50% or more, is now living in urban areas. Of course, that includes the Western world also. In China, also, urbanization has reached 60-65%. In India, we are at 32%. So that's my second mega trend of urbanization. That again has implications for housing, commercial real estate, urban infrastructure. Third is digital, the trend towards digital and automation. This, if you take the digital metrics, India is actually leading the world. The electronic identity, the Aadhaar identity, which was given to 1.2 billion people. The most rapid increase in internet users and smartphone users. I think something we're going to reach some 400-500 million. Just one metric, if I can mention, the UPI users. The people at retail level, those who make payments, retail payments as small as 50 rupees, 100 rupees, using UPI, mobile to mobile payments. UPI user transactions reached 2 billion last month in October. 2 billion. In the next 5 years, we're going to see all metrics related to the digital economy, whether it's from digital payments, whether it's from digital transactions, whether it's from automation or use of IoT, Internet of Things. It's going to explode. In fact, I think that contribution of digital economy to the overall economy could reach $1 trillion, could reach 20-25% or higher. So that's another big trend we need to be aware of. Number three is infrastructure. Now, of course, this is well known to this audience. Sorry, number four. So first is demography changes. Second is urbanization and the shift towards growth, the growth happening in this part of the world. Uh, Third is the digital revolution. Fourth is infrastructure, which again, you know about this. We have the national infrastructure pipeline, which was announced, and a fair amount of details given back in December. We expect merely in construction alone. I have seen a CRISIL report which says that in the next 5 years you're going to see about 46, 47 or 50 trillion rupees, 50 trillion rupees, which is almost about that would be about 900 billion dollars of spending on construction. And the construction includes, by the way, infrastructure as well as residential and commercial real estate. This is a huge number, and about half of it, or 60%, will be on infrastructure. About remaining will be on commercial and residential real estate. And the last point I want to mention. So let me just repeat the five mega trends I've mentioned: demographic trends, the urbanization trend, the digital economy automation trend, the infrastructure pipeline infrastructure spending, sorry, including construction and real estate and in commercial and residential real estate. And the fifth point is about climate change. This is a mega trend, not just for India, for all over the world. So increasing emphasis on whether it's economic activity or building, or on paying attention to climate change issues. So whether it's I think in the earlier panel, you heard somebody mentioning about the fact that we are aiming for 100 gigawatts of solar power. Our ambition for renewable energy is among the highest in the world. That has implications for what kind of economic activity we'll see. That has implications for what kind of industrial activity we'll see, what kind of compliance will be required, what kind of sustainable industrial growth we need to be prepared for. So I'll just leave it at that, climate change. So when you take these five mega trends and then look at what implication does it have for the sector that we have here under discussion. So you know that if I look at demography, as I said, the workforce increased from whatever it is today, which is about 400 million, to another 250 million. And if you have women's participation, even more. So what kind of trends are we going to see? We are, of course, going to see the increasing trend of nuclear families, increasing trend towards, let's say, townships or rental housing. That's on the residential side. On the working side, on the commercial real estate, we will see perhaps demand for flexible working spaces. We are going to be, the digital means we are going to see trends of work from home, working from home. The one big contribution of the pandemic has been the fact that people have got used or have got somewhat comfortable about the digital domain. The very fact that I'm participating in this conference, we are digital, sort of in the digital mode, itself shows that how this has got a big thrust. So that has implications for how workers will work. I mean, maybe there'll be more of working from home. There's of course going to be much more use of technology, safety, hygiene. So this is all. This is the implication for construction or real estate, residential and commercial. The other thing I would say is the reforms that are going on, and some of them have been mentioned. We have seen in terms of regulator, we have seen brand new regulator which came into being, I think, last year, RERA, and it's fine tuning it. It's already seen huge. It got a big impetus for the organized players. So we're going to see the transition from unorganized to organized. But I must say that the economic reforms are such that they are responsive. They respond. Some of it is trial and error. I mean, for example, in the state of Maharashtra, because the current situation demands it, we saw a reduction in stamp duty from 5% to 2% in the city of Mumbai, and the rest of Maharashtra is 3%. So that is a responsive policy, as the situation demands. Same thing, I'm sure there was some concern that the money that's locked up has to be released. So I think there's already been some modification where uh, uh, as a proportionate commensurate to the percentage of completion of work, the money which is locked up in escrows and all will be released. That's one thing. Second is the other reform is on the REIT, the real estate investment trusts. That's a financial sector reform, but that again has implications for the sector. So that is that's another second example of reform. Third example is from the infrastructure space. As you know, whether it's roadway building, highways, we have adopted the hybrid annuity scheme. So for some time we got stuck in perhaps litigation between the in the PPP mode. So we have shifted so that this is an example again where the policy response has been such to unclog those difficulties. Hybrid annuity scheme. Uh, so I think we are going to continuously see these kind of responses. Even the National Infrastructure Pipeline, which was announced in December, envisages the total amount for 5 years. Envisaged was 100 something like 110 trillion rupees. But that's going to be made up of 70-30. 70% is going to be from private sector, and even in the funding, it's going to be a combination of debt and equity. And this is an example where the long-term, the infrastructure spending requires long-term funds, and we will, I think, we'll see the marriage of long-term funding requirement with long-term investment, so resources such as sovereign wealth funds or pension funds of the West. So this is an example where there is a coincidence of the need, of demand and supply. The demand is coming from long gestation infrastructure or housing projects, and the supply is coming from financial sector reforms, which through schemes like REIT, which enable this money to come into India. Incidentally, there is also this aging. I mentioned the demography means that the aging population is in the West, so pension money is in the West, but the requirements for long-term funding for long gestation projects in India. So this marriage also is an example where we are going to see these trends. So I think, let me say that uh, whichever metric you look at, the infrastructure deficit, which requires huge spending and investment, the housing deficit, which requires the building of some 28 or 30 million new residential affordable units, the shift towards townships, the shift towards rental housing, the shift towards climate change, compliant infrastructure and housing. All this just gives you a fairly optimistic view. And the fact that hopefully policy and reforms and economic reforms will be responsive to these trends gives us, there is tremendous optimism on this front. So I will of course conclude by saying some of the comments which came earlier, that we need policy stability, policy continuity and predictability. We need a stable exchange rate, and we need a regulatory approach which is responsive and conducive for economic growth. All that goes without saying. But I just gave you some macro mega trend indicators which feed into that. So maybe I'll stop here and then come back to any.
Thank you so much, Dr. Ranade. Really appreciate your insights. It was an eye-opener that India is leading in digitization. Was not really aware of that. Thank you for sharing that, and how infra spending will contribute to 60% of the spend. And we do agree that sustainability will continue to underpin whatever we do within the industry. Dr. Ranade, I cannot thank you enough for joining and taking